Good morning, everyone. I'm Vince Lansing. This is the Goldfix Market Rundown. Today, we'll be talking about the story in the top left-hand side of your screen, special silver comments, which is a combination of Indian demand returning on the world stage and some interesting technical observations by Michael McGlone at Bloomberg Intelligence. And you can see the rest of the board there. And I'll leave that up for now. 10-year yields are 4.13, up 2.5. The dollar is 97.69, up 33. The S&P 500 is 66.43 and change, up 5. VIX is 15.46, down 23. Gold is 36.49, up 6, well off its highs. I think it was up like 15 to 20. Silver 42.07, up 27, also off its highs, but silver was outperforming handily, continues to. Copper dead in the water. That's where it was when silver and gold were on their highs, 453. WTI 63.32, down 44. Natural gas 290, down 1.5. Bitcoin down 655 at 116 spot 431. Ethereum 45.17. Hovered right below all-time highs. Maybe it made them last night. I'm not sure. Platinum, palladium mixed, mildly mixed. Gold, silver below 87 now. Grains all up relatively uniformly, so a little bit of a bid there, nothing special. Saturday morning, 8:04 a.m., gold to average $4,000, silver $45 in 2026, according to uh, the renewed Deutsche Bank uh, analyst. They're back on the scene. Okay. Oh yeah, where were we? Here we go. All right. We just sent out a post. It's a combination of two things. One of them, we think it's with a mini pod. We think it was good to put them together. One was fundamental, and the other was technical. But India's silver story is turning heads again on the world stage, turning heads again, not heads, whatever. After a sluggish start to the year, silver imports are climbing as both investment and industrial demand drain domestic supply. Dealers in Mumbai report that even as prices surge, investors are holding tight with little scrap coming back to market. Typically, they have a little bit more hitting the bid when it rallies. Futures in Mumbai just hit record highs, up nearly 50% this year, while silver ETFs saw inflows more than double their typical monthly average. This momentum suggests fresh buying could carry into year end. Now, on the technical side, Michael McGlone at Bloomberg says that 35 was resistance and now it's support. And he thinks the ceiling has shifted as well, putting India at the center of silver's path back towards the 2011 peak of $50, which is on his radar now. And we have extensive comments on that. He talks about the gold silver ratio. We talk about the gold silver ratio. He talks about uh, the relationship with gold as leading versus lagging. We talk about that as well. And then the Indian demand, we give it some context as well in the mini pod. But uh, we think it's must read, especially in the context when you look at everything that's going on. SLV is getting, we also make comments on SLV is getting hard to borrow with a hat tip to Bob Coleman there. Um, and those of you that subscribe to the premium stuff know that we favor silver right now, this time of year, over gold. If we're going to be long anything, we're going to be long silver. We think silver needs to lead this rally. We think the Fed rate cut makes people that are more likely to buy precious metals to go from gold into silver. We think silver tracks AI, sadly, but it does in this environment. And we're not completely convinced, but that's the 3 days after the Fed have been, well, Wednesday, Thursday, Friday, Wednesday afternoon, Thursday, and today so far have tracked that. Silver was extremely weak before the Fed, and then stronger than gold for the rest of the day after 2 p.m. Stronger than gold yesterday, stronger than gold today. So there could be a little bit of a convergence. You've got a physical demand coming out of India that's manifesting in SLV in the US, right? You've got silver vaults accumulating uh, tons more on COMEX. To what purpose, we don't know. You've got a technical chart that I want to show you that just absolutely just makes me giddy, and a bunch of other things. Let me show you that chart right away before I get to the other stuff. There's the chart. I will frequently make big picture comments when I'm trying to throw water on something. Like, we need to close above here for there to attract new money in 2026. Like those type of things. You hear me say macro discretionary buys new highs, macro discretionary buys new quarterly, mid-year. And we've had a lot of good ones come up recently in silver, and thankfully they're still below everyone's radar. But here's one that's on nobody's radar. Um, except Mike McGlone. And we have different numbers, but we're probably looking at different databases. I'm sure his data is better. But the gold silver ratio has never, according to him, closed above the 1991 high of it comes in at about 93 and change. So for all it has to close above this for me to get bullish. Well, the gold silver ratio, for as big of a range as it has been, and for as high as it has been channeled between 70 and 90 for the last 10 years, uh, it's still on its all-time highs. And I'm not even going back to the let's talk about silver in 1930s. I'm talking about now. It's like, if you can't get the gold silver here, I'll put it to you the way that I'm absorbing it. Central banks are accumulating gold hand over fist, not silver. If you can't get the gold silver ratio to settle over 1991's high this year, you're never going to get it to settle over. This is the biggest central bank demand for gold in forever. And the gold silver ratio is 91, below 91. What's going on here? I'm saying if it's only a gold rally, then the gold silver ratio should be above 91. Yeah, it spiked it a couple times. Pretty scary, but the end of the year, we don't settle above 91. We won't settle above 91. Anyway, I really like this. I'm thankful that he pointed it out, because I like to look at these big picture biases. And it also, of course, lines up with my own story, where I think the gold silver ratio, as long as it's below 90, you'll hear me refer to it a lot recently. As long as it's below 90, I'm comfortably long silver over gold. That's it. That's my story. Uh, if you can't get gold silver to settle over 91 on a year when everyone and their mother and their mother's uncle's cousin is buying gold, then you're never going to get it to settle over 91. Um, anyway, where was I? Related posts yesterday, Goldfix PM with a recap. I actually touched on gold silver a little bit in there. Exclusive, that's our opinion. Schwebe's scandal explains LBMA failure. It's all the same thing. It's rehypothecation at the physical level collapsing. Founders early look, that's the Deutsche Bank analysis. Bloomberg's Asian central bank demand may be topping out. We agree with that. We just think it's a little bit early. We hope it's a little bit early to be saying that, but it certainly is something that's not going to be a tailwind for more than another year tops. And then the market rundown yesterday, and then Michael Every's uh, post there. And then Hong Kong moves to eliminate dollar use to public square. That's been picked up by Zero Hedge. Thank you very much. And thank you very much to Zero Hedge for uh, various insights that we pull from reports. Okay, so next, coming soon. Gold now versus 1979. That's why it's not a spike high. That's why we're not approaching the high of 1980, I hope. Uh, Bloomberg, we already did that. Deutsche Bank, that's coming on Saturday. India's silver imports poised to accelerate. That's today. And China to loosen import restrictions on gold. That's just a news item. We'll throw it out there. And then we'll do the HeartNet walkthrough, and we'll have a Sunday founders discussion. Other than that, I'm going to do some light writing this weekend. Moving on. Data on deck. San Francisco Fed President Mary Daly gives a speech, sadly. Charts and final market check. Before I do that, just do a plug. There's the Saturday story. gold to average 4,000, silver to 45, average 45 in 2026. And I have down here touched 4,300. I think I'm wrong. I think it's touched 4,450. So basically, it's going to go as high as 4,500 according to DB, with an average of 4,300. We'll see. Can't believe bullion banks are our friends now. But there you have it. The enemy of my enemy. Um, okay, let's go to the chart. Get a little bit more reasonable here. How about one day? And gold top right, silver top left, dollar, and bonds there. All right. So I said yesterday in the recap, you should listen to the read the recap. Um, bonds have been weak post the Fed easing, and that's okay to happen, especially since we've had bonds rally for such a reasonably pronounced amount of time. Here, put it up over here. Right? This is bonds have been doing this in anticipation of the rate cut. And then the rate cut comes and then the yields climb a little bit. You'd expect that, right? Let's look at the dollar. The dollar has been dropping in anticipation of the rate cut and it rallies afterwards. All these last 3 days, dollar up, bonds up, bond yields up, I should say. Uh, that's normal, you know, but I don't want it to go on too much longer, because if it does, then either, and I don't know, either the market is saying the Fed shouldn't be cutting another 75 basis points going forward, or uh, we're in a recession. Like it could be both. Who knows? Stagflation is the word I guess you got to look at. But the sum total, the reason the dollar and bonds are important is because, well, if the dollar rallies, that's bearish gold, right? And it's going to throw water on the U.S. impulse to buy. So U.S. people will buy if the dollar's stronger, yada yada yada. But as long as stocks are going up, uh, they're kind of ignoring the stronger dollar. Again, we have to see what's going on. I think if you want to just back out all this stuff, I'm thinking, look, if you think the Fed needs, if we need a bigger bubble, which means we need to tolerate higher inflation, which means bond yields need to go higher. I don't know why the dollar is stronger, but that's probably because bond yields are climbing a little bit, and that means stocks go up and precious metals go up. So the whole market has an eye on the recession, but is hedging future inflation. That's my story. Have a good day. Have a good